Hello, everyone, and welcome to the Wall Street Blockchain Alliance's latest webinar. We're very proud to offer our latest briefing with longtime member firm Lukka on the topic of the top 5 digital and crypto asset data challenges. Thank you so much for joining us. If you have questions, please put them in the Q&A. Before we begin our usual disclaimers, please keep in mind that this webinar is offered for general information purposes only. Is not meant to represent investment, tax, legal, or accounting advice. And the views and opinions expressed during the webinar, those of the participants, namely Suzanne and myself, don't necessarily reflect the views of the WSBA or our other member firms. This webinar is being recorded. All attendees will be in listen-only mode. But honestly, we do encourage questions. Please, there's so much Q&A and so much that Suzanne and I are going to cover. Please put them in the Q&A. We'll address them as they come in, and we'll even reserve some time later on as well. With that, I will stop talking, and for a brief moment before I start throwing questions at her, give the floor to my old-time friend Suzanne Mooresfield of Lukka. Suzanne, thank you so much for joining us.
Oh, it's a pleasure, Ron. It is always a pleasure. We do go back a little ways, and probably like many of your members who just value all of you so much. We're delighted to be here. Thank you. I'm delighted to be here. I didn't mean to sound like the royal we. I meant more like Lukka.
If you give me the royal wave, we can have a different conversation.
So everyone knows I live and am based in London. So that really does sound like I was invoking something British there, but it was just Lukka really values our membership with you with Wall Street Blockchain Alliance and working with you. So thank you. Thanks for having us.
It's a privilege, Suzanne. Suzanne, let's dive in. We're going to do our usual fireside chat. I know you wanted your next few slides. If we move forward, you wanted to talk about some of your background, some of what Lukka's been focused on, and some of what we'll be diving on are some pretty complicated data challenge questions. But do you want to move forward?
Sure. Yep. Let's do that. And I will just give people, it's really not a complicated agenda. There's more than five probably crypto asset data challenges, but we're going to just talk about the five that we see and hear about a lot. And so we'll start there. And I'll always be curious if anybody in the audience has more or other ones. Happy to talk about any of them. I am, however, not a tech and data person. And so I am a finance person, an accounting person, as you'll see. And I have I joined Lukka in 2021 as a subject matter expert in the accounting and crypto for tax, or accounting and tax for crypto, and have done a variety of things. One way to think about me is that I'm old. The other way is just to think about that I've been working a long time. So I've had a lot of experience out there in the financial and tax reporting arenas, and just happy to share elements of that. I've also learned a lot from our data team and work with them very, very closely. So I will share the insights that my teams and their teams kind of have collaboratively tackle and handle and hear about. And so that's what I'll talk about today. So, um, I'll just do very quickly who Lukka is and, not try to focus, on all of those details. It kind of naturally comes up as we talk more of kind of what we do and kind of service providers like us do. But we've been around since 2014 in this industry and have been dealing with data and the data challenges since they were relatively minor to now they're extremely complex. And the risk mature businesses that are really entering into this field need a level of maturity from all of us in the industry that we're delighted to say we've been around a while, so we've got the chops, as they say. We also have follow institutional standards like the ACPA service and organization controls. We have ISO certifications. We just look for all sorts of voluntary certifications and audits to participate in so that we can be providing a level of trust to the industry as much as possible. And I just encourage all of you to look for service providers that are also doing that. So here's the kind of literally the kind of businesses we serve, and it's a whole variety. And if you recognize yourself in there, then that's great. It can really meet all sorts of needs, basically across all different industries.
Suzanne, thanks so much. Just to dive into it, and it's interesting. I do remember when Lukka started, and we're going back over 12 years now. One of the conversations that's happened in the digital asset space for a long time, and you and I have had this conversation before, was why is crypto different? And a lot of the current dialogue has been for some time, well, they're different than securities or they're different than commodities. I want to talk about something that's a bit of a trickier element. And when we talk about things like fair value, what are the challenges, what are the data challenges specifically on things like the fair value of crypto assets? I guess the question I've always had is for the audience, why is that so hard? Difficult.
It's such a wonderful question because, there's a number of things in our industry that we all first come into and we think, oh, I know how to do this. I've seen this. I know how to do data. We have, our leadership is from IHS Market. They've been doing data for a long time. And you get into our industry and you find the uniqueness about our industry that makes it really innovative and new, but also creates challenges for legacy approaches that all of us arrive with. And why don't I just this is the overview of the things that matter, but I'm gonna start with your first question, Ron, because literally I'm gonna strip it back to the basic, to the foundational thing of before you get to fair value, one of the things we have to do is deal with the data itself and normalize it and ingest it and standardize it. And this is where legacy systems often hiccup, to put it mildly. So you've got hundreds of exchanges for the exact same asset. Let's use Bitcoin as an example. You have extreme levels of precision. So decimal points that can go out to, I don't know what the latest number is, maybe 50. So if I try to plug 50 decimal places into a legacy system, or I have a system that cannot handle that, then things will go wrong very, very suddenly, even before we get to a notion like fair value. So the same coin is trading at hundreds of different exchanges. It has a different ticker on all of them. It might even have a different name or multiple names. There's certain meme coins that you can't tell the difference necessarily if you're just looking at the name of the coin. Which is it, this one or is it that one? And so we have all these things that swirl together in our world that are very different than if I'm just trading a Ford stock or AT&T or Netflix. If I'm just dealing with that, it's got a set exchange, it's got a set ticker. There might be slight variations on that ticker as you go global, whereas the world is completely different from each other within the crypto data and digital assets data world. It just is so unique.
Suzanne, let me dive into that a little bit. I'm going a little bit off script, but again, we know each other a long time. We're talking about a lot of the stuff that we looked at over many, many years. When you talk about that variety of different data points, and I remember conversations that you and I had years ago, and I've had conversations with others who earlier on in the crypto world where it was, what's your system's symbol for Bitcoin, for
Yes.
example? And the
Yeah.
contrast, I think the contrast with traditional markets is really important because it almost goes to, in many ways, to market structure, meaning
Yeah.
there's Reg NMS in the United States, for example. There is a consolidated tape. There is best execution. And if I'm hearing what you're saying correctly for the audience, that doesn't necessarily exist in the crypto world, correct?
Right. Right, exactly. And a great example that we talk about and that I talk about when I'm out and about, um, and we refer to it on a further slide, but let's just talk about it here, is in a traditional sense, we're used to things like Swift messages. I
Yep.
have a message that is going through the financial system. I know that this is a dividend. It's hard coded as a dividend. It's coded as interest. I know the financial industry. All the fields are really preset
Yep.
and the messages flow super easily. We do not have that kind of consistency. And that's, I think, part of what you're getting at there, Ron, is we don't have that kind of consistency yet. I do think the industry is going to mature into something like that, but we're not there yet. And so a lot falls on all of us who are engaging with crypto assets and digital assets, either the service providers like us, to kind of bring that order and bring that sort of master file, if you will, with us, and to normalize and standardize and create a taxonomy that helps map all the info that's coming at us from all the different exchanges and marketplaces into one of the things we talk about is a record of activity, a master file for you as a customer or for you as a regulator to be able to bring it all together and have it be unified, standardized, normalized in a way that we all take for granted in the
Yeah.
traditional financial world.
And Suzanne, to that point, you mentioned Swift. We know, obviously, we all know Swift. I'm thinking when it comes from to an equities or fixed income perspective, I'm thinking of the FIX protocol. For
Yes.
example, I'm
Yep.
thinking from a public company reporting
Yep.
perspective, I'm thinking XBRL, for
Yep.
example. And it is telling, given how far we've all come in the ecosystem of crypto, that all of those organizations are working on either things like standards or some way to engage the existing protocols that they have for crypto transactions and digital asset transactions. I just wanted to, as we go through the slides, Suzanne, you mentioned data ingestion here. And the first thing I think about coming out of Wall Street from 1,000 different years ago was high frequency trading. Now,
Yeah.
this may not have the same parallel because I would argue, and tell me if you see this the same way, data ingestion for digital assets is a very, very different thing than
Yeah.
it is for equities, for example.
Yep. Yep. It is, and it takes it literally it takes a different skill set on one hand. On the other hand, if you have a comfort level with data and data models, that is one of the things I remember talking about because I was in the when XBRL was sort of first, landing on the scene, and people talk
Yeah.
about data models, like data modeling and thinking about your data in a way that allows you to deal with all the complexity in a really organized way is really important. And it can be something that gets taken for granted. My chief data officer, who's now the chief product officer and COO, Dan Husher, who unfortunately wasn't able to join me today, um, he is a master of data modeling, and he
Mm.
brings it up every time we're talking about solving this, that, or the other thing. He'll say, we've got to have a data model. We have to have a robust data model. And it's what makes the ability to handle all of these things is to put that hat on. And that comes from the traditional space, if you
Yeah.
will. You bring that hat to this, but you then have this whole other skill set that you need. And one thing that I just sort of stumbled on as I've been talking, different people over the years is that I stumble on this notion of kind of almost being sort of bi-coastal in your
Mm.
capabilities. And you need one of the things when I first arrived in the crypto world in 2021 was the crypto native world really valuing and wanting folks with traditional experience. So the accounting professor nerd in me was useful, decade of teaching and CPA and this and that all was super helpful to the crypto asset world. You wanted that traditional sort of sensibility and experience. And then now the traditional financial institutions are really entering into this world. They've already got the traditional chops, the traditional skills. What they don't necessarily have is the crypto data, digital assets data and processing expertise. And so you need both coasts. In an ideal world, your company will have both coasts, or if you only got one coast, you got the traditional and you need the crypto, then you bring in crypto service providers. If you got the crypto and you need the traditional, you bring in traditional players. And you need both
Yeah.
now to move forward effectively in our world.
Suzanne, thank you so much. Let me interject for 1 second. Again, for everyone who joined us, thank you so much for joining us for the webinar. If you've got questions for Suzanne, please put them in the Q&A. We'll definitely address them. Suzanne, I want to pivot a little bit because part and parcel of data ingestion is what you've noted here as well, is normalization. And you've mentioned several times a customer activity record. I guess for the audience, what are the challenges of normalization and why is what do we mean by normalization and why is that so difficult?
Yeah, I'll scoot to a slide that might help. There's one that tells the story and or tries to show you the story. You've got different names of crypto assets is one of the things we've talked about. You'll have different kinds of transactions, some of which will have good messaging around them, some of which will, depending on, it'll be the same transaction, but it'll be coded differently from one crypto exchange and coded differently from a different crypto exchange. Remember, we talked about the FIX protocol. We've talked about Swift messaging. Right now, all of that data and information can look very different depending on which asset we're talking about, depending on which exchange, whether it's a decentralized exchange, a centralized exchange, all of that can come at you looking very, very different from each other. And so you need a classification and normalization structure and engine that then takes all of that and maps it to a taxonomy and to a way of processing that gets it all to be apples to apples, essentially.
Yeah.
So a given transaction looking really differently depending on which exchange you're on, all has the same sort of identifier in our data. A different crypto asset, you line up all the traits of it correctly, it'll all have the same identifier in ours. And so that's what we mean by normalizing, standardizing, and getting it ready to then do things like referencing back to your point about now we can talk about what's the fair value on this transaction, on this crypto asset. But we can't do it until we know for sure what the transaction is and what the asset is. And so that's a piece of it. There is a little bit more technical stuff here underneath the kind of the hood that we can talk about where you're ingesting data from a bunch of different venues. I'm sort of reviewing what I said, but you're standardizing the tickers, the asset IDs, the formats. You're resolving any inconsistencies you see across different of those exchanges. Even within a same exchange, you can have inconsistencies. So we've got to literally run data analytics constantly, looking for inconsistencies, and then we fix them. So at the end of the day, you can have a consolidated transaction history, crypto asset sort of specific history. I can look at all my Bitcoin, even if its ticker is XTC over here and it's BTC over there. You can look at what are all my Bitcoin holdings, at all of that, and and then we get to the fair value story coming up. So stay tuned, everyone.
Suzanne, to that point, you've given me too much material here. I've got a bunch of different questions to throw at you. So a couple of things, and I don't mean to minimize when we talk about the symbol. I think that's core and part of it. But when you talk about the normalization of data, you're talking about an entire suite of data, including I would argue things like exchange, timestamp, decimal, which is something I remember getting involved in the crypto space 10, 15 years ago. And decimalization, to old TradFi people, like, why do you have so many digits to the right of the decimal? Because we live in that new world, it was something that the industry had to accommodate. But when we look at the data itself, Suzanne, I'm ripping up the script a little bit here. I realize and I know that Lukka has over 500 venues. It strikes me how many different venues in the digital asset space writ large there are. And it might be going too off script. Can you tell us a little bit about what's that process? Is it hard to onboard new venues? What are the, how does the team at Lukka say this is a venue we need or this is a venue we don't need? Can you speak to that a little bit?
Yeah, that's a wonderful question because we're always looking to add new data sources, and we're always looking to add new venues, new nodes. One of the things, and for our fair value or fair market value Lukka Prime product, we're always looking for what are the core underlying exchanges that we will use as the potential exchange from which to identify a principal market, which we can talk about the details of that down the road. But we're always looking at this. And so one of the things we're doing is a huge thing that the data team does is scour the exchanges for signs of good KYC, good AML, good sort of jurisdictional oversight. We're looking at the quality, the underlying quality, so that we can understand what is going on with the data. Is it good data? And you can have markets or exchanges where a lot of round tripping is happening, or there's sort of fictional trades that are going on up there. Those can force prices up so that the prices aren't actually sort of robust or good prices. You can have sort of meltdowns and hiccups and things that are happening, and where our team is always looking at all of that history, all of what's going on, both in real time and historically, and assessing, is this reliable data for us to ingest first. So there is that pre-step, which is I think what you're getting at is we're looking at it before we decide this is data we're going to ingest as part of our data suite. On the other hand, what also to sort of pivot a little bit is customers come to us saying, we've already been trading on this exchange over here or that
Right.
exchange over there. Here's our data that we want you to normalize and make sense of and organize so that we can do things like calculate realized gains or losses. We can do fair value. So we have sort of two sort of viewpoints, Ron. One is just data that we ingest and own as part of data service, sort of data products that we create. We create risk metrics, we create scores of exchange, of VASPs and CASPs. We create all sorts of things where we're looking at the data ourselves and ingesting data from the blockchain. Then we have the data that's coming to us from customers and it's their own. And that comes to us via the API straight, usually from the exchange. We never have their personal keys. We have, sort of
Sure.
it's the read-only element. And that part is part we have by now developed really good systems for dealing with pretty much every exchange out there. A customer comes to us and says, can you organize my data? Can you do these calculations for us? We've already built that. So it's a sort of a different decision
Yeah.
when you're looking at the customer sort of data than when I'm looking at it from the viewpoint of, is this a data source we want to use in our own data products? Does that make sense? So
It does, Suzanne, absolutely. And as you're describing it and explaining this, I don't want to minimize one of the differences we've raised earlier on, that difference between, let's call it traditional financial markets for equities, for example, versus the markets for digital assets. When you reference some of the exchanges, look, there are quality exchanges that have good AML KYC. There are some out there that do not. But I think the challenge of some of those things are important. Understanding there's no requirement for some of
yeah,
the exchanges internationally like they do for traditional financial exchanges, which is no wash trading, no
yeah,
front running trades. And again, not implying that every digital asset exchange out there is doing similar, but that's part of the overhead that you and the team have, which is you've got to filter through that.
yeah. Yeah, you're 100% right. And that's a role that, Lukka takes very, very, very seriously. And one of the things, we talk about, we always talk about when we're um, talking about what we do is we have extremely high standards around the governance of our data, the governance of our systems and our analytics. And there's, you've heard of everybody probably on the call has heard of the Alternative Investment Management Association. They updated their valuation of investments sound practices guide a few years ago and added digital assets to it. And so part of what's in there is how you value digital assets. It's a very solid guide. I refer everyone to it. But what's also in there in chapter 4, as it turns out, is how you evaluate your pricing providers. And that's across the board. That's, back to our traditional world. How do you determine how do you think about the due diligence around buying data from any third-party
Yeah.
source to make your investment decisions and your valuation decisions? And a key part of it is the governance that you learn that your pricing provider has in place. Do they have a sound mechanism for price challenges? Do they have a price oversight board that meets regularly? Are they analyzing? One of the things you can do with crypto data, and when you're looking at it for as long as we are, as a former auditor, I'm really familiar with sampling, right? Audit is you take a sample and then you infer the rest of the population. I walked into our company and into our world, and there's no sampling. It's 100% analytics of the data.
Mm.
We are looking at everything constantly. We're roving our eyes and our techniques and our methods across all the data. So we're constantly analyzing it. It's something that's super, super important. The external certifications and reports like the ASCPA SOC reports are really important too, and they reinforce that approach, but they don't require a price oversight board. They don't
Right.
require price challenge mechanisms that are formal, but you can have those, and that's something we take very, very seriously, I guess, is to end on the point I started with. So
Yeah, Suzanne, good point. And I will do the shout out to our friends at AMA, and the fact that you can quote chapter and verse from some of their work is pretty impressive, Suzanne. I've got one more thing here that I wanted to bring up in this particular slide. It might be a little bit of a tangent, but I'm curious about your perspectives around DeFi protocols. For a long time, it's been the CeFi kind of DeFi conversation. I do see growing interest on an institutional level for DeFi. You and I and so many colleagues see the news every day about a new organization that's a stalwart TradFi organization getting involved in DeFi. Is DeFi harder from the perspective of data ingestion and normalization and some of the work Lukka has to do, Suzanne?
some of them are, and
Okay.
I am not the deep dive data expert on it, so I'm learning this from my colleagues. Some of them are more complicated. Some of them, to get to the bottom of what an underlying transaction really fully entails, is harder than others. And it's an interesting thing because we don't have standards yet across the entire industry
Mm.
for how we organize and identify transactions or how we transmit them. Then you can run into this. This one is harder than that one. And I think, the centralized exchanges, by and large, there are more sort of standardization that you see there, but the decentralized ones, you can find ones that are harder to deal with than others, or harder to ingest the data. Not harder to deal with. I mean, it's just, it's more of a complex sort of decision. And, one of the things that comes, into the conversation as you start to think about DeFi transactions, as well
Hmm.
as the protocols themselves, is, dealing with smart contracts. And again, I
Yeah.
learned this from my colleagues. Smart contracts, this is that part where you bring your traditional data processing hat to the ranch, to the
Yeah.
rodeo. You will not get very far,
Yeah.
because you will run into this thing called a smart contract that somebody has to know. You have to parse it, and you have to understand what's happening between the hashes, which I do not, but my colleagues, fortunately, Dan does, and all of his team. And that you go into that smart contract and you have to break it apart, because there
Yeah.
can be multiple different transactions within that, and multiple different legs of the transactions. And that needs specialized knowledge and specialized skills. And folks, like I said, you come to the rodeo with only your traditional data hat on, and you
Yeah.
just will get bucked off the horse pretty quickly. So
Suzanne, Dan is not off the hook. We'll have to have him on another
we're
webinar
bringing it
in the
back.
future.
Yeah,
So
yeah.
shout out to Dan, and Paige will help us make that possible. Suzanne, we talked in prep about the questions that I had that I wanted to run through with you. But every slide you bring up gives me 3 or 4 additional questions. So we're going to wing it going forward. But do you want to move forward?
Sure, sure. Happy to. Um, so this one is really, really, really important. And again, we need this before we get to fair value. So that's why I'm not ignoring your fair value question.
Oh, I get it.
Actually, I love fair value of crypto assets. Anybody that knows me even a little bit knows this is the sweet spot I always sort of gravitate to. So thanks for bringing it up. So I would have brought it
I'm
up
here to help,
regardless.
Suzanne.
Yeah. So the assets in the transactions can be harder to classify than you would think. I think we've sort of touched on that the transaction classification part. I don't need to say a whole lot more about that, but because they can be embedded in smart contracts, right? And so to get at the meat of what's going on in that smart contract, it can be complicated. What is this transaction exactly? There's new kinds of transactions that we
Mm.
don't have a good analog to in
Yeah.
traditional finance. What's staking, really? What would you map it to?
Right.
I brought that up once on a call with an accounting regulator, and I tried to give them a suggestion, and they stopped me and said, "We'll be the judge of that, Suzanne. Just
Sounds about right.
explain the transaction to us, and how it works, and then we'll decide." So I had an idea, but it, sort of got batted away. So what is exactly, when there's new transactions and things like liquidity pools,
Yeah.
and I have seen people try to create the analogs. Sometimes that's all we have to work with.
Mhm.
Other times we just literally have to go, this might be a new financial transaction. This just might be a new transaction. And we all just need to make sure we're identifying it accurately and then processing it consistently. Because that's the other thing we have to do within
Yeah.
this data world is, are we processing the transactions consistently?
Yeah.
And I'll jump to assets, and then I want to make a, maybe a comment about both assets and transactions. Actually, I'll say it first so I don't forget to say it. But the other thing you bump into with this is that every regulator and
Mhm.
every jurisdiction in the world might have slightly different
Yep.
definitions for these things. So how do you handle that? Is this, in the UK, we have two kinds of staking. And they go on different lines in your tax return over here. And so if I am put, and then you're taxed differently depending on which state it is. So I got to make sure, we all have to make sure we're consistently and that we're adapting to the local jurisdiction or regulatory definition. So popping up to the asset kind of classification, this is one of my favorite things to talk about these days, because what I've learned as I've been out and about, including talking to regulators, is people think if I just name the asset, I for sure know what it is. What is it to be classified as? So if I say Bitcoin, if I say ETH, if I say USDC, this is what it is. And the US bit has handled it that way in the past in a regulatory way. This crypto asset is this type of thing once and
Mhm.
for all. And my example I give to people, and we'll see how it plays with you. You can tell me it's the dumbest
Oh,
example you've ever heard.
doubtful.
Is what do we have accounting and tax for? And bear with me for a second because it sounds like I'm saying nonsense, but it'll make sense in a second. What's wood? What do we have accounting for a piece of wood? Do we have accounting or do we have tax for wood? No, because just saying the name wood doesn't mean I know the actual economic use of that piece of wood. And I'll
Yep.
back up and explain it. If I have a piece of lumber sitting on a shelf of Home Depot, how do I classify that? Guess what?
Mm.
That's inventory. If I have a piece of wood in my house that I've built or a building I've built, how do I classify that? Guess what? That's property, plant, and equipment. If I have a piece of wood that I've shredded down and turned into a gift certificate or a gift card, how do I classify that? Guess what? That's cash and cash equivalents. So
Yeah.
my point is, we can't just look at the name. We have to look at how it's being used. We also have to look at the terms and conditions underneath the asset's hood or on the platform that I am using that asset on. Because
Yeah.
guess what? Unless you know the terms and conditions, you don't know for sure what that asset is, how to classify it. So I've got
Suzanne,
a bunch of noise I've thrown at you there. So
no,
fire away.
that totally made sense to me, probably because you and I have been in this business too long, and I get the wood and the use example. I mean, one of the examples that I'd mapped that to in the digital asset world was something that only popped up 2 or 3 years ago that's been talked about is, look at digital assets or wrapped tokens.
Yes.
And then it
Yeah.
becomes the
Perfect.
example of, wait, you're doing what with it and
Yeah.
what
Yeah.
is it? And you may remember the old conversations at least one administration ago when they were talking about whether or not something is a security, an
Yeah.
equity, does it transform? And those were the first times I had heard how
Yeah.
can something transform. So layers into the asset and transaction
Yeah.
classification challenges. Suzanne, I want to ask a question here because you brought up regulators and jurisdiction. And we're
Yeah.
headquartered in the US, and certainly we'll get to CFTC and SEC in a moment. You're based in UK, but you've got a global remit. I don't want to minimize how important, again, regulator and jurisdictional issues are, because it's not just the United States and
Yeah.
UK, it's EU, it's Singapore, it's Dubai, it's all of the regulatory authorities. I guess the question I've got is, how the heck do you keep up?
Yeah. Yes. Yes. That is a great question. And it's gone from moving very, very slowly so that it was
Mm,
it was easy to keep up because there wasn't very much movement. Like the industry took off and there was a lot of movement, a lot to keep up on. Then it sort of stagnated as regulators decided to enter into the story and sort of, if you will, almost put brakes on things with regulation. And so then it was easy to keep up because, in the US for a while it was everything's a security. And so then we just knew. Having
Yep.
said that, the thing I also often like to remind people is just because a legal definition or an act of Congress could decide that Bitcoin is a fruit, we would not go over to the US GAAP accounting and account for it as a piece of fruit. There are
Yep.
it is literally decided in a legal framework. It can be one thing, and this goes back to our point, but you go over to the accounting standards and it is an intangible asset, even though perhaps over in the SEC land, it is a security or commodity. Right now, the SEC has finally publicly really came out and said this a few years ago. Our classifications don't drive your accounting classification.
Mm.
You have
Yeah.
to turn to your US GAAP accounting classification to determine what's what, where it goes on your balance sheet. And I'm sort of bringing in yet another layer there, but
Yeah.
it is hard to keep up. Some of us, that's what we do for our jobs. I will say, and this sounds like I'm shilling for you, but it isn't hard to do. It's a simple fact. A way you keep up is by being part of a really good trade association. So
Yeah.
I don't have to rely on just my knowledge or my time, to scour the horizon. I get to take advantage of what you bring to the table, what all the other members bring to the table, your weekly roundups. All of that is super, super important. And it's a role that Wall Street Blockchain Alliance, for instance, plays for me a lot. And so I will end that question with, you did not set me up. I need to make sure the audience realizes that wasn't a planned answer.
That was unsolicited. And Suzanne,
But it's the truth. It is the truth.
we are deeply grateful. You mentioned, is it a fruit? I want to go back to one thing, and some of our lawyer friends may know this. If we were going to go down the road of talking about Howie and orange groves, Suzanne, I was going to have to end the webinar. And I realize I've delayed you on these slides with my dopey
That's
pictures.
okay. It's okay.
We'll move at your pace. There's so much more to cover, and we only got 25 minutes left.
All right. Well, I'll keep going. So I think we've covered really everything that's really important. I'm giving an example here so everybody knows these aren't the only classifications.
Right.
These are the ones that come up a lot, just so people know. And property is on there because for tax reasons, we think of intangible assets in US GAAP accounting and in IFRS accounting, frankly. For
Mhm.
tax reasons, it's often the exact same crypto asset is property under most tax laws around the world. There's exceptions to that. UK tax law is property. So when you dispose of it, it's a capital gain or loss that you have to think about, so but it's also important for us to think about property, securities, and commodities for the standpoint of tokenized real world assets. And I know
Mm.
you and I have talked about this, I think when you were over here, Ron, the notion
Yep.
of tokenized real world assets, those are coming online and to all of our attention more and more and more with each passing day. And many of the traditional financial institutions are getting involved with them and thinking about them and setting them up already. And so tokenized real world assets, it could be that this tokenized version of property is classified as property, or depending on this jurisdiction, depending on the world you're in, that tokenized real world asset could be an intangible asset, depending on which regulatory regime we're talking about. And so I put all of these here so that people just think about these main ones. Like I said, this isn't necessarily the limit, but these are pretty much the key
Yeah.
five that you'll run into. And we have to think about, we have to know the underlying traits, terms and conditions, and legal and regulatory frameworks to make sure we classify correctly. So I'll move on from there to, this is the same kind of issue with different types of transactions that
Yeah.
you might run into. These are the main ones. Doesn't
Mhm.
and DeFi, I confess, DeFi is a catch-all at the end
Yeah.
there, right? Like anything that doesn't go into the first five, chances are it's some sort of DeFi transaction, but you still have to handle it
Yep.
properly and know which one. So, um, and again, this one of the things I'll say one quick thing here on the first bullet point, that when you have a good service provider that can handle and classify these transactions well, it's important because certain tax filings are coming online.
Mhm.
There's the crypto asset reporting framework that you and I have talked about, which is a
Yep.
global one where we're going to be, tax jurisdictions are going to be transferring information about all of us and what we're doing in the crypto world,
Yep.
and 1099 DAs as well. They have, these kind of tax jurisdictional sort of requirements can have a bucket for other or
Yep.
9999 or whatever, sort of the answer is. And I have heard more than one tax jurisdiction say they do not want to see a bunch of others. They
Right.
want, they want all of us to be using all of our insight and expertise to accurately kind of classify both the asset type and the transaction type. And so that's the only thing I wanted to draw out from this
Yep.
slide that we haven't already covered, is you want to avoid calling something other in, especially in these tax filings, if you can help it. Fair
Suzanne,
market value. Oh, go ahead. Sorry.
yeah, no worries. I wanted to raise one more question because you brought up 1099 DA
Yeah.
specifically. I wanted to raise that. I did have a couple of questions there and wanted your feedback and comments. You and I remember when the IRS finally started looking at digital assets in the United States and they came up with 1099 DA. And if you remember, all respect to the Internal Revenue Service, the first iteration of 1099 DA was a catastrophe from a data perspective. I guess the question I have, particularly in the conversations you're having with all of the different types of clients that Lukka has, for example, are organizations in a better place now to verify the data of 1099 DAs? Are brokers, for example, in a better position now to provide accurate 1099 DAs? What's your perspective on how that's evolved?
I think it has evolved and it has evolved positively. I think people are more comfortable. I think the IRS, did sort of, kind of tweak some of the guidance. There were signs that they were listening to the industry. There were other signs that they were like, yeah, this might be hard, but too bad. You
Yeah,
got to just do it. And so the
sounds about right.
industry, to its credit, keeps maturing and growing and responding. And you can see that, Luca went from, you know, learning about the 1099 requirements to being able to help fill that gap for
Yep.
brokers and exchanges. And if they have any hiccups in their side of it, you can work with providers like us that can help make sure the data is in the form and format that it needs to be, that the transactions are organized correctly. But it has really improved. I do think right now in the world where what we have to report mainly is gross proceeds
Mhm.
from transactions, if I'm not mistaken. And it'll get a lot more interesting when we move to the next year when we have to have basis. And we have to show that, because that's frankly where the trickiness really is. I mean, all the stuff we talked about, getting the asset classified correctly and the transaction classified correctly, getting the data wrangled, which people really take for granted until they start to wrangle it, is so much harder than you think. But it gets exponentially more tricky to get to the actual tax related cost basis, because
Yep.
some of those rules did change around how we all do this with the new IRS guidance. And so some of that did present a significant change. If you have good underlying data models, and I'll go back to my good friend Dan, data models and a data sort of machine, if you will, you could
Mm,
react to those changes really easily and quickly. But they were significant changes.
got it.
But
Thanks.
like I said, I think everybody's in much better shape than they were, and everyone's getting more in better and better shape. I do think it'll be interesting once the cost basis sort of requirements hit.
Understood. Suzanne, I've got one more thing. Now that we're on asset valuation, we're starting to hit the core of some of the conversation. The slide that you put forward really hit me because your first bullet point about no closing price. I very distinctly remember a conversation about 12 years ago with an old Wall Street colleague, and he said to me, well, what was Bitcoin's closing price today? And my head almost exploded. So talk
Yeah,
to us
yeah,
about that
yeah,
challenge of asset
yeah.
valuation.
Yeah, that's great. It's really good because we are all used to you strike NAV or strike your price, your fair value when the market closes. And so that's why that point and that sentence, that phrase really, really matters. If there is no close, when do you do it? And to the Financial Accounting Standard Board's credit, to the SEC's credit, a lot of, everybody's got a lot of credit in this. They've looked at this and said, we're not writing more requirements. So fair value, for instance, in US GAAP and in IFRS is very principles based. There's very little rules and requirements in there. There's principles. And so when the FASB looked at updating its standards for fair, what crypto assets could be marked to market through the P&L at fair value, they didn't try to open up what we call ASC 820, the fair value standard, and say, let's rewrite this for crypto. Let's literally add more rules and let's add more things.
Yeah.
So the punchline actually is there is no closing price, but there is a series of either best practices or normal practices that people are entering into. And you do have to, this isn't accounting advice because I don't ever want to do that, but it is, the fact is it can vary. We see a very approach here and
Mm,
we can handle all the variances, but one of the varied approaches, it will depend sometimes by your audit, your external auditor.
yeah.
So some folks treat the closing price of Bitcoin, for example, as the closing price of the local stock market wherever they
Yep.
are. So they'll just say, boom, what is the ending price at this time, date, stamp? Others go all the way to 00 UTC or to midnight. And that is somewhat a suggestion that you'll see that does kind of follow on from some principles in US GAAP and IFRS that says if after hours the value changed a lot, you probably
Mm,
should incorporate the after hour price up until midnight because that's
yep.
that day. And so we see a mixture there. You just want a provider that can handle whatever time of day. There's a time of day, I want to say it's Bermuda or Bahamas where it's 10:30, is the close of the market. So if you're in that marketplace and you want to mark to 10:30, you want a provider who can help you do that. So
Suzanne, thanks so much. Real quick question here. It might be a bit of a tangent, or you might be addressing it on a later slide. So my apologies in advance. Um, how important are the calculations and the challenges of asset valuation when we look at highly illiquid markets? And I'm
yeah,
thinking,
yeah, yeah,
there's a very broad difference
yep,
between Bitcoin
yep,
at 1.3, formerly 2 trillion in global
yep,
market cap, and Ron coin that has no market liquidity,
yeah, yeah,
for
yeah.
example, whatsoever. Is that an additional challenge for the work you do?
It is, and it's not. So it is from the standpoint of there are some crypto assets, like you said, that just don't trade very often. So what are we going to do with those? We have great guidance in the accounting standards, for instance, in the SEC guidance for actively traded markets, and so those still have more challenges than you would guess. And I've got a slide that I want to just mention or show
Yeah.
people at some point that illustrate where even in an actively traded setting, you need real care and real expertise. But the illiquid markets, the accounting guidance does give us principles to work with. So you can use a big bid-ask spread, for instance. You can use a midpoint. You
Yeah.
can use a comparable actively traded asset. And then you kind of match your asset to something that's comparable. You have
Hmm.
to have a good reasoning for your auditor
Yeah.
for why you're determining that's comparable. Lukka, for instance, tracks 150 plus different fields per crypto asset. So you could find a comparable asset, for instance, with enough information. And then you always have the level 3 approach in US GAAP and IFRS, where it is you build your own model. And Lukka isn't, Lukka, for instance, is an input, our actively traded price can be an input into a model that some of our customers and clients use. or regulators use. And you can have that be a piece of how you get to your own valuation. You add a discount for liquidity, a DLOM, as many of us know from our traditional finance world.
Yep.
All of those principles can still be brought to bear, even in an illiquid or less often traded crypto asset. And
Suzanne, thanks so
the
much.
AIMA guide talks about that, just to reference everyone back to the AIMA guide. So
Yep. I want to point out for the audience, I mentioned that Ron coin is a very illiquid market, and you didn't disagree, Suzanne. But back to you, my
I thought
friend.
you were a billionaire overnight when you
No,
entered that. You
no.
sure?
My
Or
wife
you're
has
just
questions
doing
about that.
why don't I fast forward us
Yeah.
to, I'd love to, there's a whole Lukka Prime methodology for how you identify the principal market in
Yeah.
for actively traded assets. And it's really important because we don't have Ford Motor Company just trading on one market. We have Bitcoin trading on hundreds, right? How do you figure out which is the principal one? Because that's the one you use to then come up with your fair value. And we have a method, we have a white paper that kind of lays out the method. It is super, super reasonable. We presented it to regulators, standard setters all over the globe. It is a really solid approach that literally drives through the middle of the accounting standards on both sides of the pond. And so I'm going to jump forward to that because
Please.
jump forward from that because of this notion of how do I why I think you and I talked about this in advance. What could a principal market be something you need to look at more dynamically
Mm,
than not? Do I need to look every so often? Do I need to look just once a quarter, once a year? What are the risks if I just go to a website and grab sort of a price with a time date stamp on the website? What are the risks in doing that? And the risks of doing that are that those are often averages, and US GAAP and IFRS does not allow you to use average prices.
right.
You have to have an in an ideal world, an observable exit price, and you do that P times Q. Just here, that's the price. And that observable exit price has to be from the principal market. And you have to have really good reasoning around why and evidence for why you chose a given exchange as your principal market. Because it can't be opportunistic. Oh, I chose this as my principal market
Right.
because it had the absolute highest price, even though there was only 2 transactions on it for the last, 24 hours. And this market over here with the lower price had millions of transactions. I ignored that. The
Right.
US GAAP and IFRS guidance says don't ignore that. So what I want to show here is why how all those principles come together when you're actually thinking about a very really interesting use case, an interesting case study. And this is when an exchange, Bittrex, made an announcement that they were closing shop. And so here's the picture that's really important, and I'll talk everybody through it. So they announced that they were closing shop, and you can see at the beginning on the left-hand most side of the slide the prices of I think this was Bitcoin on there at the beginning before they made the announcement. The prices across multiple exchanges were probably relatively similar. So the Lukka Prime price was similar to just Bittrex in and of itself. What happened though, when the announcement came out, is the price on Bittrex alone spiked
Yeah.
outside of the norm, right? And if you were using an average, guess what would have happened? It would have given you a price somewhere between Lukka Prime and that spike, because a VWAP or an average would have grabbed the Bittrex spike, and it was a volatile, unruly, disorderly,
Yep.
perhaps situation. And so that price, is that the best price? Was that the best principal market? And Lukka Prime just sort of stays out of that fray this is that thing where we're analyzing the data constantly and going, oh, something is happening over here. And so we're not going to use Bittrex anymore as part of our principal market because it has become an outlier that isn't what the accounting standards and the SEC and regulators, they want you to not be in an outlier position. They want you to be price discovery. Fair value is meant to be let's find a really good price and discover a really good price that is tied to sound principles. And so just to show everyone, I wanted to show that picture because it shows you how if you don't think about this dynamically, if you were locked into Bittrex is my principal market no matter what, and I never check what's happening in the data and what's happening in the
Yeah.
trade data, you might value you might come up with a fair value that's just literally distorted by accident. I'm not saying anybody's doing that on purpose, but it can
Yeah.
be kind of an accident. It's sort of why you should look at this and keep looking at it. Think about your principal market more regularly than just sort of and this is just, Suzanne thinking out loud. I would do it. I'm not giving people advice, but I would think about it more regularly than not because you can have situations like this crop up.
Yeah.
Um, so this is kind of the scalability and timeliness, Ron, part is just stuff that's in a way it's kind of common sense. You do the volume of transactions that's coming
Mm.
at you in our world is a lot like high frequency trading, to be honest.
Yeah.
We deal with millions, hundreds of millions of transactions a day, and so this is a world that you need to know you can handle the scale of what's happening, whether it's for your customers or whether it's just for your own, sort of work and your own trading and your own investment, and that you have timely information coming at you. That is really, really important because as you could see with the Bittrex slide, just from like 1 hour to the next, if your information isn't timely, you can
Yeah.
miss really important information. So
Yeah. Suzanne, if I could
yeah,
real quickly on
yeah,
the prior slide, you mentioned
yeah, yeah,
legacy systems. I think that's
yeah,
critically important for us to recall because legacy systems in many ways across many different types of firms were not designed to handle some of the limitations and some of the data points that we're seeing. How
yeah.
hard is that build out for you?
Yeah, yeah. It is hard. So, I mean, we really invest in our tech stack, and at some point I'm going to make you come back to us one time and talk with Dan and our chief technology officer. Our new CTO is just brilliant. Our tech stack is really, really important, and it will be to everyone. So it's not just us, but the amount that you invest in that in terms of the quality of it, in terms of the quality of the people sort of running it, operating it, keeping it on top of things, is really, really, really important because you cannot match the scale and timeliness needs of this industry
Yeah.
without the best tech around, frankly, and appropriately designed. So
Yeah.
that's the thing I think everybody in our business is always looking at is how do we recalibrate? How do we redesign? How do we make sure we're operating at optimum capabilities for the needs of our industry? So,
Thank you, Suzanne. Appreciate it.
yeah, so this is literally just a picture that, sort of describes what we've talked about. I mean, one of the things I do think that is not necessarily something we talked about, but directly is that we do a lot that it just provides real-time information. And with this amount of scale, it's really important. We have a dashboard and, we have something called Insights where you can just see in real time what's happening. We're all used to the little bit of delay that you might have in your regular markets, and you
Yep.
pay for real time. Our industry is no different. We have, you need real-time capability if people want it. You can also have it on a time delay. Audit ready is also really, really important because because fair value isn't just, I know the exact market that Ford is trading on. And so I can go just see when the market closed in the United States, get the close price, multiply it times the Q of my holdings, and I'm at fair value. If I have to analyze the way the accounting standards say across which market has the most volume and recency of transactions and
Mm.
quality transactions, and it doesn't mean that that's the one I'm always trading on. It can be a different
Right.
market that I'm always trading on. how do I prove to the auditors or to the SEC if they take a look that how I got there? How do I show them? So things can't be in a black box. You have to have, a situation where you can showcase to your auditor, to the SEC, here's how we got to that principal market. Here's the P, here's the time of day. And that's extremely important and something we often brush over until it's audit time or until the SEC sends us a comment letter, right? Then we go, oh yeah, that was important. But I'm here to tell you up front, it's really important. And you want to make sure you have that capability internally as well as any third-party providers you're using. In the interest of time, I realize we're out of time.
I'm so sorry, Suzanne.
The last thing you want is really trustworthy certifications and all. And with that, I will wrap this up and remind everyone what our 5 challenges were. So,
Suzanne, thank you so much. I know I delayed you with some of my silly questions.
No, they're great questions. They're never silly. So
we're just about at time. For those of you who watched, thank you so much. If you've got questions, Suzanne, how can people reach out to you or the company with questions or comments?
Yeah, absolutely. We're on LinkedIn. Follow us on LinkedIn. Look us up on LinkedIn. I'm on LinkedIn. So just come to me on LinkedIn and I'll happily make sure if I'm not the right person, I get you in touch with the right person within Lukka. But
Suzanne,
really a pleasure as always, Ron.
Suzanne, a privilege to have you. I've got so many more questions. I've already started taking notes for webinar number 2. Dan's in trouble. You'll have to come back, Suzanne. Thank you so much, everyone who joined us. We'll leave it there. We'll hope to have the recording available for you soon. Have a great rest of the day. Bye-bye.
Thanks so much, Ron. Bye.